Good morning, Zinger Nation. Happy Wednesday. Welcome to Pre-Market Prep. Spencer Israel. I've got Joel Elconin and Dennis Dick with me here today. Kind of more the same. We are going to talk about the fact that yesterday the S&P 500 officially entered into a correction as per the textbooks. But what does reality say right now? The fact that tensions are continuing to rise, the fact that the markets are, broadly speaking, higher this morning. What does that tell us about what is to come? We've got a few earnings on our radar. I know we want to talk about did you see the energy stocks yesterday? We want to talk about that. We want to talk about retail with our guest, Ryan Craver from Canal. He's going to talk about retail stocks at 8:35. So a lot to get to. Smash that like button and let's roll that intro. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. All right, good morning. Hope everyone had a nice evening, overnight, morning. Everyone good? Joel, Dennis, we all good this morning?
Yeah, I don't know. I'm in a good mood today for some reason. I don't know. I don't know. Why? I don't know why.
Good
Because the
moods are good.
futures are up 34 handles. I don't know.
That's probably why.
Yeah. Folks, we got the low close of the move yesterday at 4,300, and we couldn't even come within 9 handles of that in the pre-market trading. You guys tell me what's going on. We're up 34 in 3/4 handles, 34.75. I'm going to go out on a limb. I'm saying an inside day going from the Globex session from Tuesday. That's we got to get above 91.25 or below 42.50. Anyone wants to take me on that bet, I will. Oil down a couple pennies here at 91.88. We're going to talk a lot about the oil stock move from yesterday, whether that's a tell or not. Gold hovering just under 1900, down 860, 1898.80. Silver down 13 cents, 24.18. Bitcoin just a trading range, trying to get back over 40, up 1140 at 39,000. In Ethereum futures, they're going green too. They're up 148 bucks at 27.48 and a half. And maybe I'm in a good mood because we had such a lively pre-market show. Mitch was coming in, very opinionated, which is what this show is all about.
Which is going to be today.
Yeah.
Strong opinions all of a sudden from multiple people. Mitch and me and Mitch seem to be on the opposite. I don't know if Mitch is there, but we seem to be on the opposite of the scale. But it's going to be interesting here. I mean, I don't know. Do we want to get right into it? Where do we want to go, man?
I don't know.
Lead the way, Spencer.
Joel, yes, Spencer, you're the producer.
Joel, are you with me in that? I don't want to say I don't care because that's not the right word. I do care, but I don't have an opinion on any of this right now. I don't have an opinion.
And that's okay.
I don't have an opinion on the market. I seem to be in the minority here because everyone else here seems to be fired up about we're going up or we're going down.
Yeah.
I don't know how you make heads or tail of this, but the reality is we did enter a correction yesterday in the S&P 500. We're down 10% from the highs. I think that's worth noting. And I think it's also worth noting that the fact that we are broadly speaking, we're up this morning. Even though there was nothing to indicate that there was no news headline that would seem to justify the market rising overnight.
I mean, whatever the statistics say, but who's saying we're in a correction?
It's when it's down. It's officially when it's down 10% from the highs.
10% is a correction. 20%
This is the stupidest thing in the whole world. Because we use the S&P for one, which is a poor indicator of overall market. We know that already. Joel doesn't like when I say that. And then secondly, secondly is why do we have these? Oh, it's 10%. It's a correction. 20%. It's a bear market. I will tell you, half the stocks have been in bear markets here for the better part of a year. So just ask Kathy Wood how it's going. I mean, that's, a lot of names. Anything growthy has been in a bear market for a long time. So whatever. They want to say correction of the official definition is 10%. Those are stupid definitions. I've never agreed with them ever since, who I don't know who came up with that.
Okay, then what is the Dennis definition? What is the Dennis definition?
Well, you can just look. Do you need a number to it? I mean, just start looking at what the overall stocks have done.
It's broad.
I mean, sure, the S&P maybe is just entering corrective mode, but again, maybe I've got the problem still with the index. But I mean, IWM has been ugly, but you just look everywhere. I mean, there's carnage all through a whole pile of stocks. Now, there are some value names held up very well. We know Berkshire Hathaway's held up well, but there's been carnage everywhere. And what I'm going to say today, just to take us to our opinions here, is the market has responded extraordinarily well. And Joel, you were making this point too. Extraordinarily well to what has transpired in the last 48 hours in the Ukraine situation. Rallying all the way back yesterday, then it did sell it off, but we bounced towards the end of the day and we're trying to rally here again. I actually like the tape. I like the action. Even though we were down significantly yesterday, I like that we're still struggling, we're still fighting. And I tweeted out multiple times yesterday. I did get stopped out. I had bought some growth names. I did get stopped out. I've still got one left, but I did get stopped out of a few of them yesterday when we started breaking down new lows. But I think I got stopped out near the lows because we bounced here again. I think if you're not in any growth at all, I think it's time to start nibbling. Not going all in, but I think it's time to start nibbling. We are massively oversold in so many names. Like, let's look at Square. And yes, I'm talking my book here. I did buy my position in Square.
Hey, Dennis, before you go into that, can I just,
give me your thought process here.
No, let's start I just kind of feel like I feel the same way. And maybe it's because we watch the markets too much and and we have this feeling. But when what were we texting on Monday morning? And we're like, oh my God, they're coming, they're really, we fall 100 points off the high. They're really coming off this, coming off. But then like this 4,200 handle is just like kryptonite for the bears. I mean, you got under 4,300. They got it down there in the pre-market. They got it down there yesterday. That was near the areas of other lows. We're 6 points from Friday's close, and they've thrown everything but the kitchen sink at this market. I mean, at some point, when the market won't go down on bad news, and then you just got to, it looks like, that's what it looks like. That's what it feels like. If we were down 36 handles, I'd be looking for a test of the low of the moon. But that's what the tape says. And then we can go into Square, and then we can go into the behavior of the oil stocks yesterday. But to me, it's like the market doesn't care. The market doesn't care at this point.
It cares to a certain extent, but it was a good response. I mean, you had the Russia RSX at one point in time in the Putin conference on the weekend trading down 21%. It bounced up back out of there. I mean, do we honestly? So there's a number of things, but do you think they're sending in, and so if the Ukraine situation does escalate and they do invade, which it looks like they're going to do, is it going to get down and dirty and the UK is going to send in fighters and, we're going to defend Ukraine to the death? I don't know if that's the case.
I don't think so.
I don't think so. I'm obviously, you feel sorry for the people, but I don't know if they're going to get down and dirty and just start, okay, no, we're not going to allow this to happen. They're doing sanctions. They're doing what they can to try to punish the actions, but I don't know if they're going to just jump in and just,
boots on the ground.
I don't know. I don't know if
maybe
after, as much, and we've put boots on the ground, obviously Iraq, Afghanistan. I mean,
not
I don't
a good
know
record.
Do it in this case.
Not a good record.
So thought process here, and maybe we should take it to oil right now, because oil, obviously, this is good news. I mean, for oil, really good news yesterday for oil. Bad news for everything else, but usually good for oil. In the fact that, you're getting into a war type situation, Ukraine invasion. I mean, this is what they've been buying the USO up. Well, what did they do yesterday? USO opened up near the highs and sold off. But worse, what did they do with all the oil stocks? And this is what I was saying yesterday on the show yesterday. I said you could kind of feel it. These oil stocks want to go down, but the Ukraine situation isn't allowing it. Well, anyways, they didn't even care. They opened up all those oil stocks at the high, and they pulled the rug out from under them so quickly. It is such a crowded long. Oil is so crowded long. everybody. I mean, Craver, you got every single person tooting their horns on oil. It is so crowded. And yesterday's tape, Chevron opened up at the high tick, Joel. CVX 137 on the tick. If you shorted the open, you took 0 cents of heat and went straight down all day on a day that basically, Putin is, invading, getting ready to invade Ukraine. The oil stocks all get hammered. So that's telling me that I don't want to be long oil at all. And oil has been moving opposite to this market for a long time. So if I don't want to be long oil stocks, I maybe want to be long some of these other higher growth names. Because if oil starts to come in, you'll start
to see the money going to go?
Stocks get bids. Yeah.
When you say oil, do you mean oil, or do you mean the oil stocks?
Well, it's the same thing, Spencer. All the oil stocks is a levered play on oil. They're gonna, if you put the USO and you put the XLE, it's the same thing.
Yes, but they behave.
The charts are virtually identical. It's just a levered play on oil by buying oil stocks. So if you're thinking XOP is going to go opposite USO, that's going to be something that is not going to be in anybody's playbook. It might happen from a day or two, but if you put the charts, and maybe you can do this right now, put USO and XLE on the same chart.
They don't.
Spencer's good at this.
They don't always.
Nothing does everything 100% of the time, but I'll tell you, the correlation isn't 50, it isn't 60, it is high, like super high. You know why I know that? I do the arbitrage, and I don't lose a lot of those days that I'm shorting oil stocks and the oil's going the other way. It's not 100%, but those two charts, if you look at the 90-day, USO, December, the bottom, XLE, December, the bottom, straight up. I mean, it's hard to argue that the USO doesn't track along with XLE. So there's going to be no evidence of that. So in any regard here, my case in point is that there's so many people hiding, and I'm very convicted. I might be wrong, but I'm very convicted on this. Sometimes I'm like, I don't know. I feel convicted on this. If I had oil stocks, I would be selling them because they did not respond well to the good news for them of a potential Ukraine invasion. It's going to get, another headline. So you're going to get another debt bounce. So you don't have to panic. It's just crashing here. But if it's not going to go up on an invasion and they're going to pull the rug out from under it, it feels like it was a sell the news event. So we've been buying oil, and the speculation might be invasion. We get the potential for an invasion and they pull the rug out from under it. It feels like it was a buy the rumor, sell the news event. And that's why I don't want to be long oil stocks. And everybody in the chat, there's half people saying I'm wrong, half people saying I'm right. Everybody's got an opinion on this. There's no doubt. I personally would not want to own oil stocks right now. I may be wrong, but I don't want to own oil right now.
Aren't we going like all electric? Like, when's that happening? Aren't we?
Well, that is happening eventually. That's why I haven't owned oil stocks in my long-term portfolio for a long time, and I've been wrong. I've been dead wrong. But I feel like this time I'm right in the short term. I'm not good with the long-term stuff. I'm not as good. I don't know if I'm a good long-term money manager even. I make some money, the market goes up, you make some money. But I know I'm a pretty good trader. Why? Because I make money every single month trading. So I feel like in this case, I'm right. I might be wrong, but that is a terrible key reversals in all of these things. Chevron, Exxon, Schlumberger.
But
Halliburton.
You have an opinion, so let's shape the opinion, right? Let's determine how we're going to determine, because I'm with you. When we started the At the Close show yesterday with Spencer, we were searching for the title, and I was thinking of it was like sell the rumor and buy the war. It's like, at least for the market. Now, oil's a different thing, but if you're long these oil stocks and you're heavily concentrated in it, you got a really nice move, right? And I'll just go to CVX, and you guys are, my tricks. They're not very difficult to understand, but you had a move from 139.5 to 130.5, right? You had a 9-point break. So if this is the break to buy, and this is, we're going back up, and Chevron's going to 150, and oil's going to 100, then this thing is going to rebound. It's going to get back up to this 135 area, 134.5, 135. It's going to hold. It's going to form a little base, and then it's going to take off. But the longer it takes for this to recover the 135, I think, in ExxonMobil, that was a big day. People are caught, okay? You had to break. And then you had, we're getting back up to 140. Now you got a whole nother group of buyers. So I think we can see what happens with this. And if these stocks can just bounce right, it's only up 21 cents. Crude is down. It gets back 134.5, 135. It holds. Boom. We'll go back up to 140. I think you can do that for all your oil stocks.
So that leads into the next question. And with oil going higher, it's been a major issue for this market. And if you think we're going into World War III, it probably is going to go higher. I don't think we're going into World War III here. That's my thought process. So, and then you take it over and you obviously have Ukraine situation here escalating. I mean, does it give the Fed ammunition to not be as aggressive? They're definitely going up in March. I'm not saying they're not raising rates, because I tweeted that out yesterday. People say, oh, you're an idiot, they're raising rates. Well, not aggressive is not equal to not raising rates. There's two different things here. I'm saying they can back off the aggression a little bit.
Oh, for sure.
I don't think we're going 8 times. I've said all along. I don't think there's no way in the world we're going 8 or 9 times. I think we're going.
I've also never thought that.
I think we're going 3 or 4. Honestly, I think we're going to go. We might even go a half, but I think we're going to go. And I think if the market holds up to it, it'll be a different story. If the market just it doesn't care and just starts rallying, but there's going to be a wealth effect issue here too that the Fed will eventually cite as well. So there's lots of uncertainties here. So I just don't think we're going into this crazy environment where I think a lot of this is priced in, to be honest. And then take us to the growth names. And I've been a Kathy basher on this show for years, but I feel like it's oversold. I feel like there's a lot of growth names that are massively, massively oversold. And they wanted to go up yesterday. ARKK wanted to go up. And, I thought it was going to go up too. I thought it was the open at the lows and rip it off. And that did not happen. They turned around and I tried to buy ARKK and I got stopped out of it. But I'm still looking here. I just think there's going to be this wicked short squeeze in a lot of these high-tech growth, because high-tech growth is one. There is some shorts that are building positions in here, and I think they're late to the party. And 2, there's a lot of people who still want to own these stocks. So I do think if you look at an, and I brought to Square before, I look at a name like this and I bought some. I mean, is the valuation still high? Yeah, but it's not crazy. It's at a point where it could eventually grow into that valuation now. So but there's a ton of names like that. I mean, I'm not but there's been so many. You can pick your poison. I mean, let's look to Palantir. I mean, I don't like the name. It's not going to my long-term portfolio. But the reason this has been selling off so heavy the last 3 days is that Cathie Wood is dumping 10 million shares a day. She dumped another 12 million shares yesterday. She's only got 9 left. So here's the story on Palantir. She's got 9 million shares left by my math. She's going to dump them today because she's been dumping 10 million a day. So it looks like she's blowing the entire position out. I think, she's going to blow it out here. It could be down again today because when you sell 10 million shares, it puts pressure on the stock.
So she was 10% on the volume yesterday.
She's 10% of the volume.
You never want to be like that, man. You never want to be like that.
As traders, you're trying to identify the whales to get ahead of them, and this is it's a gift. It's telling you she's selling here again today. So maybe I don't want to be this buyer on the open, but maybe I want to be buying Palantir on the close because she's going to be done. She's going to be done selling. And that pressure that she's put on that stock is incredible. Don't kid yourself. Those last 3 days getting sold off with the market, but it's exaggerated because of Cathie Wood's selling pressure. She sold 35 million shares the last 3 days, and the volume over those days 300 million. It's 10-12% of the volume. She's a whale, without whale of all whales.
All right.
So I'm just saying, I'm trying to make an argument here, and you guys can go and talk for 20 minutes if you want after this. But I'm trying to make a point here.
No.
I think everybody is rah. We got to be in oil stocks, and we don't want to touch growth. I think that trade, the time for that trade was months ago. I now think if you're all oil stocks and you're no growth, I think you got to reallocate today. I think you're starting to buy nibbling in some higher growth names. Never going all in. Never, I'm selling oil going 100% in. That's asset allocation. Don't do stuff like that. You got to stay diversified because we all might be wrong. But I think there's a trade here, even on a stock like Palantir, for a dead cat bounce, because she's going to be done trading at the end of the day. I might look at PLTR here at the end of the day. Now, at the beginning of the day, she's selling another 10 million shares today. But at the end of the day, maybe there's a relief pop because the whale seller is gone.
It's a good idea. I'm putting it on my list here. It's a good idea. Remind me at 3:30. Okay?
I will have, if Palantir is down today, I will have 10 people that will reach out to me and say how stupid I am because you said Palantir was going up. So that's why I'm trying to be clear to say I believe at the end of the day she's going to be selling. Predictably, we don't know for sure. Maybe she's going to hold the last 9 million shares, but all things indicate that she's probably selling another 9 or 10 million. That's going to put some pressure on the stock. So end of the day, though, maybe that pressure's gone.
Did anybody ask you yesterday if Palantir bottomed? Was that the yesterday?
I did have people, the market.
All right,
I
so
had
the bottom's
multiple
not
people
in.
reach out. Was this the bottom? So that's the one indicator that's saying my whole thesis is out the window. And yes, I'm trying to call a bottom here. Yes, this is the most dangerous thing in the market.
You're playing a dangerous game here, Dennis.
Dangerous game going against stuff that I normally
all
do.
your rules.
I know. I just broke a lot of rules here. Trying to call the top in oil and the bottom in growth. It may be wrong, and you know what? If I'm wrong, I'll get stopped.
You'll lose a little bit. You'll lose a little bit.
And on Palantir, let's just say the S&P goes down, takes out yesterday's low, takes out the 420. 420 is a line in the sand for the SPY, Joel. You got to say, like, that's the line in the sand. That's the level it absolutely needs to hold. And the whole thesis would be out the window if the 420 caves. But I like the response. I think so far, so good, the response to the Ukraine situation, because I would have thought if we were full invasion this week that we would have been down a hell of a lot more. And I like the response.
And on Palantir, you also have a clear out. You have yesterday's low, and you have the all-time low was $8.90. There you go. So or $1.50 away from that, or $2 away from that. So
yeah. Somebody's saying she might be all out. Maybe I missed a day here. I'm pretty sure I had it add up that she had 21 million to start the week, and she sold, what, 12 million yesterday? And then maybe it lags a day, so maybe my numbers are wrong. Maybe she is out today. But I think regardless, she's going to be out either at the beginning of today or the end of today. By the math, looking at ARC, I think she still has 9 million. I don't know if anybody can verify that. So I think by my math, when I was doing it on the weekend, that she's still 21 million shares, and I saw 12 million go out last night. So that makes me think she's got 9 more.
Nick's yeah. All right.
Remember, there's 4 or 5 funds. You got to look at them all.
Yeah.
She's got like the RKK. She's got them all through her fund.
All right. Well, let's move on here. We're gonna have Ryan Craver on in about 10 minutes to talk retail. Let's talk a few earnings though, because we have a bunch reporting this morning. We can go to Lowe's. We can go to Overstock, which is one of your big gainers in the morning.
Yeah.
One of your big winners. Let's start with Overstock here, OSTK. I saw a lot of very enthusiastic activity on my Twitter about this stock yesterday and today. So there's actually 2 headlines here. The first headline was from yesterday, and it was that ICE, Intercontinental Exchange, the parent company of the New York Stock Exchange, is investing in Overstock's T0 platform. That is seen as a major endorsement of T0. The second headline is the earnings this morning. I think it's probably less relevant than the headline from yesterday, as evidenced by the fact that the stock is trading higher, despite the fact that their EPS and sales both came in below estimates. But the ICE investment into T0 is a major endorsement of the platform.
This fits the bill of oversold. So don't call it overstock, call it oversold. $110. I don't know what the hell the value. People ask, is it cheap? I don't know on those scales. I don't follow this company even closely enough. But I'll just say, stock that goes from 111 to $36 in 3 months often has some type of. It's been so easy for the shorts. Has it not been just so easy for the shorts and all these names? I mean, yeah, you had a little rip roar and rip your head off in the end of January for a few weeks there. But I mean, this is pretty much straight down. I think the trades are going to get a lot harder for the shorts. So I don't know if it holds on, but I would not be like actively shorting this rip. I will tell you that on these names. And that's just going with my overall thesis that these oversold growth names, I think it's like the easy money's been made on the short side, and it's going to get a little bit more difficult.
Let's see what happens. I mean, we can definitely get to the top of yesterday's range on this one, right? We're up 4 sticks, week close, so comes down to 40. That fills the gap there. See if you hold at 40. That the problem is you really don't have anywhere to go because the close was down at 36.35. But if this is real good news, do you want to explain what that T0 is, Spencer? Because that that hasn't been talked about in a long,
I don't know
long
what that's
time.
all about.
Yeah, well,
that's above my pay grade.
I remember they launched it in like 2017. I want to say it's basically a blockchain marketplace, as I understand it.
For stocks.
Well, not for crypto, for digital assets, for coins, and no, it's not for stocks. It's for coins.
Who was the company that said they were going to try and do something for stocks? I thought that wasn't. I thought I actually asked like a few years ago at the FinTech Awards. This company was talking about it, and like the CEO was there, and I cornered him. I'm like, "Hey, what do you got?" And then I emailed. He walked away, and I emailed him. He never responded.
That may be the end game here, and that's maybe like the implication of of New York Stock Exchange investing in this company, right? Is either New York Stock Exchange wants to get in on the crypto exchange game, or vice versa. But there are a number of crypto exchanges out there. The fact that the New York Stock Exchange company chose this one, I think, is telling. Thank you, Ryan D. That's a better way of saying it. Tokenized shares on a private blockchain.
Yeah, thank you. Yeah,
that's all above my pay grade.
Yeah.
Anyway, it is.
Ryan.
I saw a lot of people that were very, very happy. A long time Overstock bulls, very happy about this headline yesterday. And to Dennis's point, I would say it's been as easy for the shorts in the last 3 months as it was for the longs in the summer of 2020, when you went from 2 to 128. That was easy, and this is also easy, just for the other side of the trade. So anyway, Overstock, big downtrend, but good headlines. A good headline yesterday. Earnings from this morning, frankly, I don't know how relevant they are in the grand scheme of things. Let's move on here. We talked about the bar being low for Lowe's in light of the Home Depot report. Well, the earnings report for Lowe's this morning was very, very good. Their EPS came in above estimates. Their sales came in above estimates. They raised their guidance for the year. Their EPS guidance was raised, by about $1 from the mid $12 range to the mid $13 range. They raised their sales guidance as well by several $billion. So it was a great quarter, great report for Lowe's.
I knew exactly right. I mean, I honestly thought about just going longer in the report, but I don't like taking the risks like that. But this was a low bar, pun fully intended. Well, obviously, after Home Depot blows it away and they hammer it, then they hammered Lowe's too. So numbers were fine. Stock's getting a relief pop here. I mean, you want to be the second report. If they hammer the first one, you want to be the second, and that's the case here. So I think they were going to rally this almost no matter what. So, and you are seeing the pop in it. I don't know. It comes back in the resistance area, though. So I don't think I'm actually chasing on this one. But nice lift for anybody who had the guts to take it long through the report.
I'd like to see it hold 221.45. That was the top of yesterday's range. If not, once again, nowhere to go. The close way down at 14.59. 220. This is a good number for you. Ahead of Friday's high. You got that close on Friday at 222.69, and that's just where we're at right now, 7-point hop. So anybody that got beat up on the Home Depot, did a little averaging down yesterday, you're back to Friday's price. So I like to see hold the high from yesterday, and for continued upside, take out that close from Friday at 222.69. Full disclosure, I've been long this thing, I don't know, for 3-4 years. I don't even know what the price
Warren
is.
Buffett Jr.
Yeah, I don't even know where it's at.
Joel low-key holds everything. He doesn't tell us, but low-key he holds like 500 stocks in his.
No, not that many.
He tells us when we mention them, but he does own a lot of stocks.
Yeah,
I own a lot of stocks too.
I just don't. I try not to look at them because I'd sell them all.
That's the best thing. Is honestly, and Warren Buffett said that in the long-term portfolio, it's better not to look, because I do it too. I look at it as like, I'm going to sell it. I mean, the trader in me probably cost me money in my long-term portfolio. Don't be a trader in your
especially too, Dennis. Like you get done with the open, right? And then you're like, oh man, I'm gonna look at and then you're like taking all the action in from the open.
I even sold some of my Nucor yesterday. I've had that for like 5 years, but I was looking, bring it up. I sold 1/3 of the position. And
you've been hanging on in that one
a long time. I bought it at like $48 or something a long time ago. So it actually hasn't even been that great with the time value of money, because I probably bought this like in 2017, maybe even 2016.
Wow.
Yeah, so I've had a long time. I've still got 2/3 of it, but I don't know. I'm just looking at 125 area, and I've got the whole thesis that the commodity trade is overextended and they're hiding in it. And I feel like it's time to ring the register in some of it. So, anyways, Nucor is right up there, right near all-time highs. NUE, I'm looking at, not X. 125. I mean, this is where when we get back to July, we got to 128. Recently, we got to 125. Now we're trying again, and then that ugly candle yesterday. I think that's a key reversal. I think that the money, I think you got to be lightening up in this.
For you, I just like to bring up X because it's a little bit lower price stock.
Sure.
But for you X traders here, you had that blip over 25. Now you got a triple top. You sold off yesterday. You're opening right into that area here. So we got a 4-star right there, 2470. If you're looking for more on the upside in X, but that's a big level. Someone's been hanging out there for 3 days. You sold off, opening back into it. Make sure it gets through and holds that area. We're tapering off a little bit here. We didn't have did we have an 830 number or anything? A little bit. No. Not much. I'm no alarming here, but still up 27 3/4 handles. We just backed off to 43.30.
And don't chase. We don't need to chase. Again, you're not in a market environment that you need to chase, but you're going to get a pullback here probably again. And that's where I'm looking at buying some names. So again, Square's low yesterday, just using it as a poster child here, 93.13. Now up at $96 here in the market. You know what? We'd probably pull in again, because that's what this market does. Probably gives you a bazillion chances, but I feel like I'm still, I'm sitting so anti-growth that I'm just adding a little bit, because I don't want to miss the bottom. And I feel like we're getting close to a bottom in some of these names. Is it the bottom? I don't know. But I love the response to the Ukraine situation. I think the market held up actually very well.
It could also be early yet, but I guess.
Yeah, of course.
Only time will tell. Okay, let's do a few more. Let's do Palo Alto. Strong report from PANW in what has been a relatively strong trade here. Earnings beat, sales beat, guidance raise.
The stock is best of breed. It's been unbelievable forever. It hasn't even really sold off. So this isn't one of those cheap, growthy names, because it's just been best of breed. But it hasn't even participated in the sell-off, which is telling you something. Cybersecurity is not going away.
Yeah.
Am I buying on a day it's up 32 points? No. But would I buy some of these other names? Like, what about a CyberArk? What about a CrowdStrike? Maybe it's time to start nibbling those names. I mean, taking it away from PANW will bring it back. But CrowdStrike was $300. 3 months ago. It's been cut in half, basically, 166. I mean, there's, the valuations are nosebleed, but maybe it's a time to start nibbling, and I think that time is now.
All right, let's just look at PANW. That's the headline stock. I mean, you're going short into that report. I don't know about that environment, but pre-market high, that's a good target, 514. If you absolutely feel like you need more than the pre-market high, next daily high comes in at 523.55. That'd be a big move, but see if it can take out the pre-market high and the momentum. Where to buy this thing on a pullback? I have absolutely no idea. If it starts to go, I mean, you could say 5. I don't know. Top of yesterday's range would be the first place I would throw a bid out, and that's 486.97.
All right, let's put the earnings on ice for now. We can come back to it if you want at the end, but let's bring on Ryan Craver, the founder of Commerce Canal and our retail guru here on this show. We didn't mention TJX yet. They reported this morning as well, but Ryan's going to give us his overall thoughts on the retail trade right now and how good or bad the earnings have been so far. So let's get him on the show. Ryan, good morning.
Good morning. How is everyone?
We are fantastic. Before we get to the retail stuff, how's the Peloton been treating you? Good?
It's still going well. Obviously, I do not own the stock. I was stopped out years ago, what it seems like years ago. But yeah, it's still going well. And in fact, the treadmill and the bike.
So. Excellent. All right, Ryan, at a high level here, I know we're still pretty early. We've only heard from a couple of retailers. We heard from, as I said, TJX this morning. We've heard from Macy's. We've heard from Walmart. From your point of view, how have the numbers been, and what are your expectations here as we hear from the rest of these companies?
So TJ Maxx, no one's loving what they saw thus far. I think what's interesting for us is predominant portion of our business is e-commerce. And we have seen some weakness in e-commerce in the month of February, year over year. This month of February has been soft relative to the 2 previous years. Obviously, they were pandemic years. You had more people at home shopping at home. You got a heck of a lot more stores open. So I actually believe that as we see some of these stores report, we are going to see some continued weakness. But I think some of them present a buying opportunity. Especially in the off-price world. I think looking at a TJ Maxx bottoming right around this 4% that they're down or so pre-market, if we start to see some strength in some of these off-price brick and mortar players, I think it's a buying opportunity. I think there's going to be some strength as we continue to see a lot more people working. We see a lot more people leaving homes and, having more stores open. I do think this weakness in e-commerce for the Amazons, the Shopifys, those guys, I don't think it's fake. I do think it's there for the most part.
All right. I want to share some of these charts you were kind enough to send over our way.
Nice charts.
Let's start with this guy. Amazon, is the elephant in the retail room here. But elaborate on what we're seeing here.
Yeah. So I think if I stop and think about what Amazon did when they reported, they took a look at their international sales. They took a look at their North America sales and they said, holy smokes, we didn't grow. And internationally, we were actually negative. They thought about it and they said, you know what? We showed the street that AWS or our services business is growing. They'll be happy about that. This might be the time to turn the subscription number up. So they turned the subscription number up. Everyone read the headlines that AWS returned to acceleration and growth. Subscription is going to bring in another $4 billion overnight. And everyone said it was a great quarter. You look at the underlying data, the overall retail business is not growing. And it's having considerable issues in growing. So I think when 2 years ago, we started the whole narrative around Apple becoming more of a services business, the same thing's happening to Amazon. So I think that they're going to continue to struggle to grow the top line. They'll run the retail business at break even, and you'll see their services business drive the bus and drive the profitability.
This is a great example, and Apple did this as well. Well, not to the same extent, but Apple has done this with their own services. This is a great example of a business that had a cash cow that pivoted to other cash cows. That this is the same transition that Facebook is trying to convince the market that they can do right now, though they're obviously in the very early innings of that. Apple's been able to do it to some extent with their services, but Amazon obviously with AWS has been the success story in pivoting your business from one thing to 4 different things. So a really good chart here. And then I liked this guy. Sorry, go ahead. Were you going to say something?
Completely. You're totally right. Okay. I mean, I would not be surprised to see gangbuster profits for several more quarters. The stuff that they need to perform is performing. The stores aren't selling anymore. The online store is not selling any more than previous.
All right, but this
here is what's really interesting.
Yeah, go ahead. No, go ahead.
So the green on the top is now their advertising business. Before, they never split it out. They put it into a category called other. That green is effectively what Facebook lost, right? So if you think about Facebook, they've blamed iOS. Yes, that's part of the problem. But a lot of that attribution, a lot of that money that went to Facebook and Google shifted its way to Amazon over time, specifically within e-commerce. So now they're saying loud and proud, okay, guys, you wanted visibility to our advertising business. Here it is, 31 billion annually. We're bigger than YouTube. What do you think about that? They're growing it at a 30% clip. It's an amazing business. And right now, I mean, candidly, 80+% of the business that we're managing is on Amazon. And you can't sell if you're not spending $1 to push your product on Amazon. So I would think what they'll continue to do is what Facebook did 5 years ago. Add additional slots within the search rankings and increase the overall cost per click over the next several years. And you gotta spend it or you're not gonna sell it. It's an amazing business.
And it sort of gets at that question. Well, if Facebook is losing market share, I mean, the money has to go somewhere. Everyone that's spending $1 to advertise on Facebook is, and then now they're going to spend what, a quarter. What happens to the other 75 cents? Where does that money go? Well, you're saying Amazon.
Is Facebook being attacked from all angles? Is Facebook, Ryan, just to bring it to before I leave Facebook, is this like being attacked from everywhere? I mean, you've got other social media platforms coming at it. Amazon's attacking it. I feel like everybody, like Zuckerberg, is totally under attack here from competition everywhere.
Yeah.
Yeah.
It's rough. It's rough.
So you're telling me you're not a Facebook bull?
Yeah, I am not. I haven't owned Facebook in a while, luckily. I think the last leg of the stool to fall was the user growth, right? So they were increasing user growth quarter on quarter since the beginning of time. And then they were always saying our cost per click that we were yielding or our ARPU was going up quarter over quarter. So they had that great story. And then all of a sudden they dropped a bomb that their user growth, their monthly average users, daily average users had dropped. I don't think Wall Street liked that. I think that was the beginning of the end. Are they still a dramatically profitable engine? Yes, but they don't have the growth story.
What about the reopening trade, Ryan?
What about
yeah, I mean, I think that kind of, I mean, you look at, well, first of all, I just wanted to ask you about who's going to pay more than $65 for Kohl's. I mean, what did you think about that? And now it's at 54, so I'm not sure what people
is Kohl's a buy here? Like if they want to buy at 65, now it's at 54.
What happened to that? Everyone was going to bid. I wanted to ask you about that, and then let's just just talk about the reopening trade and as far as retailers are going to benefit from that.
Yeah, I actually pre-buyout of Kohl's, I would have said I like it. Post-buyout, I think sell the news. Yeah. I don't know if it's necessarily going to happen. I think what's interesting is for years we talked about the Macy's of the world leveraging their real estate and their leases and things like that. Then Saks came along and said that we're going to do the spinoff of our .com. Now Macy's has said it's not worth it per Alex Partners. Kohl's has buyout rumors from private equity. I think you got to stick with what was working before the real estate, before the buyout rumors, before the .com spinoffs. And that stuff was the off-price business. Everyone knows that they want to spend less of their wallet on apparel, clothing, goods, right? They want to spend more on rent. They want to spend more on housing. They want to spend more on health. And the only way to spend less is to go to the Five Belows, the off-price guys like TJ Maxx, Ross, Burlington. Those are the guys that I think if we're looking to play anywhere in retail, that's where we play right now. So, I do believe in the longer-term thesis of the e-commerce guys like Shopify and Amazon, but I think they're having some struggles right now.
Like what about Macy's yesterday? Reports a blowout number, buyback, everything good. The stock turns around, gives it all back, closes lower, has a key reversal, just a mess on the technicals. Thoughts there? Same thing, just staying away because it's not a discount retailer?
I would stay away because it's not a discount retailer, right? There's no good growth story there, right? It's going to continue to be a grooming story. We're going to continue to find ways to become more and more profitable. We're going to close more stores. We're going to optimize our supply chain, yada, yada, yada. Now, if you're looking to play value in Macy's and hope for a buyout similar to Kohl's, maybe, but there's no good story in Macy's. There really isn't.
Okay, let's take you to TJX, which just reported earnings. We haven't talked about that. Maybe Spencer could give us the numbers. It's trading down 5% on its earnings report. It has been hit as well. This is one you've liked in the past. You're getting a nice dip on it here again on the earnings report. It's already bounced, hit $59. It's up to 61.5 now. Thoughts on TJX?
Candidly, I'm actually trying to put in buy orders as we speak.
Full disclosure.
I'm actually trying to buy this stock right now, so please don't talk about
literally right now.
I like the numbers. I like the numbers. I like the company. I like the overall thesis of where I think brick and mortar is doing well, right? So I think the open only comp was incredible, right? So in Q4, they did come if they were open. And we know that they're opening more. And we know that people are more desensitized to in-store shopping with COVID in its waning days. Cross our fingers. So I like it. I actually believe that we may see some sort of bottom pretty soon here for them, at least in the short term. I'm a big fan.
Ryan, I just want to know, broadly speaking, like, it seems to me that the consumer is strong. We had a really, really strong retail sales print in January. I know it was a weaker number in December, but that was a pretty strong year-over-year comp. But strong retail sales in November, October, September, August. Shouldn't that just flow down to most of the major retailers here if retail spending is up, which it is?
Yeah. So yes, you would think it will. With that said, I quite candidly, I was a little surprised by the retail numbers. I didn't think they'd be that good, but they were pretty solid. I just don't know when the breaking point is, since the stimmy checks have stopped, since we've got this inflation number, since we've seen rents and housing go up so dramatically, yet we are hearing that the economy is opening up a little bit more. So one would think that it's going to make its way or trickle down into the retailers, but I don't know when that breaking point is. The retail numbers that were just announced were quite surprising to me.
Ryan, before we let you go, this is a great conversation. I just love your perspective. We've been following, you in the retail market for a long time, but we've just spoken for 13 minutes here, about the retail sector, and there's this whole geopolitical situation going on here, like with Russia, and then like in the war in the Ukraine and stuff, and it didn't come up once in our conversation. Now, you obviously, you do your business, Commerce Canal, your average. I mean, does it ever come in? Like, does it ever affect your thinking or your psychology about, the future of retailing and anything like that? Or are you just kind of like, there was the pandemic and, there was the trade war with China and now Russia's invading Ukraine. I mean, how do you focus and just give us your perspective on that? It's a tough
great
one,
question,
Ryan.
because we sell everything from. Yeah, no, I like it. We sell everything from $5 underwear all the way up to $2,000 fur jackets. What we see in these valleys of despair, if it's something that's on the luxury end, generally we start to see luxury taper off a bit in terms of buying. If it's something related to Ukraine or it's choppiness in the stock market. So on the luxury end, if you don't got the stock market going up and to the right, generally we see some weakness flow through. We haven't seen much of that yet. On the lower end, it's more about consumer sales and how much is coming into the pockets of households. Am I worried about the back half of this year as of right now? Not as much because we had so many issues that we've talked about previously in Q4 and Q3 of last year with the supply chain and everything related to the inbound of inventory. I think what we may see is because so many people missed Q3 and Q4 of 2021, they're overbuying for this year. So if the economy and the spending doesn't maintain at least what it did last year, I think we're going to see, again, another round of discounts, severe discounting. So that's my biggest concern. Now, if Ukraine escalates, I do think that there is some negative sentiment that comes into the consumer that eventually trickles into their spend. But usually we see it at the high end, where it's the more frivolous purchases.
Great
answer. All right, Ryan Craver, Commerce Canal,
I hope
retail expert. Ryan, a pleasure as always. Thanks a lot.
Thank you, guys. Have a great rest of your week.
Yeah, well, talk to you soon.
All right, I gotta say, someone in the chat mentioned overstock. If I was trading overstock overnight, I would be very pissed off right now. Overstock is blasting off right now. Companies control the flow of information, and there are rules about when they have to release information. Overstock had earnings. They had a press release out yesterday, and they had earnings out this morning. The earnings was out like 2 hours ago. It was like 6 a.m. Now they have their earnings conference call is 8:30 this morning. At the same time of the conference call, they drop another press release that says, "Oh, by the way, our T0 thing that that NYSE invested in yesterday, we are announcing that we have clearance and settlement functionality on the platform. Look at us, it's amazing." That just dropped 20 minutes ago. They had that information. They had the information yesterday.
They could have just put it all out
there. Had that
They're dropping tidbits. Just like you get a bump, you get another bump. It's 3 tidbits really now. They did a tidbit last night, the earnings report, and then this. So tidbit pops, tidbit pops, tidbit pops.
I guess it's good. It's working out for them, I guess, because the stock is moving more now. But I mean, just for the sake of transparency, just lay it all out.
Lay it all out there. Yeah, people are trying to digest the new information, and then you're getting more fundamental information.
Yeah, I mean, what is there another headline coming in 10 minutes? I don't know.
Like again, I'm glad I didn't short it at 41. You know, I said
it was a good
I wouldn't want to be short this stock. It's now 45, so I guess we were right on that one. But I don't know what to say on a lot of these names just oversold. I would say overstock 50 is massive resistance. So if this just gets absolutely silly town, I'm not saying it's going there by any means, but if it was to get absolutely, that would be my target. If I was long this thing right now, 49.90 would be my target. If I'm setting up the trade, but it's already like, you know, I can't go and buy it up 23%.
Yeah. Let's see. With this one, it's always good to see where your pre-market high is. Right before the bell, 45.86 is the current high, and when you're looking at the dailies here, there's just nothing there. There's nothing. When there's nothing there, like it was coming on the way back down, it's just people that have been potted on the cheap. They're like, wow, they were averaging down yesterday, and they're like, hey, I'll throw some out at 46. Oh, I got taken to 46. Oh, I'll throw some out at 47. Now, wow, 48, 49, 50. But 50.10 is the daily high from the 15th, and the previous day's high was 49.34.
Right,
once again, where to buy this one? I'll leave it to you guys in the chat. I have no idea.
I think you had to be buying it yesterday.
Yeah, exactly.
All right, and then I want to mention ATVI real quickly because this is a
Dennis Rand.
This is a good example of how it pays to know the news. If you didn't know that Activision was being acquired, and you saw the headline that for the first time ever, Call of Duty is delayed, you would think, oh no, that's terrible news for the stock. If you didn't know they're being acquired, but they're being acquired, it doesn't really matter.
So it's a good example of how stupid the news algo is. So the news algo, obviously this one that hit it down last night, isn't programmed to know that the company's in a takeover. So it's good to know. I think you mean know the story. So, following the story, obviously, this has already been acquired by Microsoft. So not going to trade on its individual company headlines, at least not much. They hammer this down. The news algo literally on that breaking headline knocked this down $1.50 last night. And that just pissed money away because it was like, I actually saw it hit my filters and I was like, I'll try to buy that right now. I can see what the headline is. I'm like, it's wrong. to be selling it down to 80. And I went like 80, 50 bid, no dice. You had to be like, it literally, his next ticks were 81. So you had to be sitting out there really to get it. You weren't going to get it after the fact unless you were buying 81. And it's still at 81 right now. So it's not going to down 20 cents because if the merger for whatever reason got killed, that the merger didn't go through, then it would be trading on its company fundamentals. So it can trade a little bit on it, but to knock $1.50 off this last night on that headline shows you how dumb the news algo is. And we've been saying that for a long time. There's a lot of really poorly written news algos out there.
All right, I know it's ticker time, and there's a few tickers in the chat. I have to hop though because I'm preparing for our next show, our special monthly list maker show starting at 9 o'clock here.
Oh, no.
We're going to be highlighting the top projects, the top promoters, and the top exchanges in the NFT space. Everything you ever wanted to know about NFTs
cool.
at 9 a.m. So Mitch is here, Joel's here,
Mitch, save the show.
I gotta hop though. Save us, save the show. See you guys.
Tiger Woods, let's go. Let's do it.
They want to talk Kodiak Sciences. Obviously, this must have had some data. Ooh, ouch. $50 yesterday, $11 today. This goes when you're investing in small little biotech names, individual, reports, and obviously we can give it to you here now. Came out at 6 o'clock, announces the top line results from its initial phase 2B3 study of blah blah blah. Obviously, probably didn't hit the figures. Study did not meet primary endpoint. That's all you need to see when you see did not meet primary endpoint. They hammer and they take no prisoners. That's what is actually happening here now. Again, these stocks, when they go to 170 to 50 now to 11, they usually continue to leak. So could it bounce to 12, 15? It could, but there's so many people are like, oh, it's down 38. It's going to come back. Tell you, a lot of these cases, these smaller biotech and these smaller drug stocks don't come back.
I thought you were going to tell me Kodak.
Kodak. I haven't looked at Kodak forever. There's a segue for you. KODK. Oh, it's ugly.
Weren't they doing vaccines?
Oh yeah. That's what they're doing now, Joel.
450 got to 350.
Wait till the metaverse mention. let's keep going.
Kodak's
let's take a look at some of the.
It kind of makes sense in the metaverse, though. There you go, Kodak execs. That kind of actually makes some sense. Taking pictures in the metaverse.
Let me see what I got in the chat here. Rolling through. Seeing Roku mentions, but no, that got a little bounce there. DraftKings out of favor. Nvidia. We can take a look at that.
Well, it's come down. Again, disappointing numbers. It seems like I don't even know if they were disappointing.
They weren't even
they hit it on there.
Yeah.
I think if you don't, it's not cheap. Nvidia hasn't been cheap. I bought the cheap one, Intel. That was a big mistake. Nvidia's best of breed. You got to sometimes pay to be best of breed. What's a PE on Nvidia now? Like 60? More, probably more. Let's go find out. Joel, do the technicals while I find that out.
You're leaning, it's up 455. You got a nice pair of lows to lean on. At two, so if you're going for $8 away here, I don't know what he had a 10-point rally. Maybe if you really think that 230 is the bottom, maybe see if you can get it back at like 234, 235, and lean on that 230 low. On the upside, simple target. First things first, 240.64. That was yesterday's high. Things kind of open up on the upside after that. That's what I'm looking at in NVDA. AMD gave some back yesterday. I think some analysts were spouting off about it. Got a nice move. Gave some back. Trading right back up again. 290. This 119.5 is a big area for me. 1920, yesterday's low, a low from last Wednesday at 1954. So that's key level on the upside. Support at the close if we get there, 1565.
I think if we start to rebound in the high tech growth, which I think we could, I think these names could be buys. So I'd be more inclined to buy a dip, not a rip. They're ripping this morning, but you get a little pullback here after the open, which probably inevitably happens because this is what the market we're in that gives you a bazillion chances. Maybe you do start to add a position in NVIDIA or AMD.
All right, last one I want to touch is, of course, the Kraft Heinz. I was calling this stock out
here.
I've been looking at this stock, catching the move, talking about it on Money Mitch. Looks like someone in the chat has caught me talking about it. Let's take a look there. It's had a great.
What is the catalyst here? Like, why does it continue?
Earnings?
It's just how the earnings, the run in after the earnings, or it's running into. I don't even remember when it reported. Oh yeah, I reported back last Wednesday.
Yep.
So it's pretty good numbers. That would have been on the 16th, and it gapped up that day, and it's been that. So it's the earnings run. It's still running from earnings.
That's big.
Yeah, and I think traders are looking for trades in the defensives, right? With all this uncertainty, I think
you're right.
That
actual few days, it's a good point. That there's been some money, moving into some of these types of names. I don't know. I'm not chasing Kraft Heinz. I'll tell you, up 10 to 15% in 5 days for Kraft Heinz, one of the biggest moves in a long time.
Oh,
I am definitely not chasing. Could it go up to the 40? I mean, it's in rocket ship mode right now for Kraft Heinz. 44 is the old high. Could it eventually get there? It could. I'm not chasing it.
What was yesterday's high? Closed right near the high of the session, 40.44. Going back here, I mean, if you're looking for this is a tremendous run, 40.93. that was your July of 21 high. So maybe, if you're looking for another target, but wow, what a stellar move. All right, it's late here. I'm gonna hop off. I'm gonna talk with Peter Winter at Wedbush, and he's the one that's got kind of in the camp that we're only going a quarter point with the Fed in March. So join me on Pre-Market Prep Plus, and Triple D, check in with you later.
All right, we'll see what happens, guys. Like always, pay attention today to see what happens. If there's any macro headlines, I think you always got to keep that in the forefront.
There will be.
One thing that I'm watching is natural gas mentions today. I've been worried about what's going to happen with Russia's reaction with natural gas, sanctions coming upon them. Are they going to fight back with natural gas supply? That's what I'll be paying attention to today. Dennis and I are on both sides, and that shows you guys how it is in the market right now.
Yeah, you're bullish oil. So give me your bullish oil. Give me your thesis, because I am right on the whole bear train on oil here now.
So my biggest
thing
is
a pop. We're getting a pop here this morning, and I would be selling that pop. Obviously, we're up here this morning, but give me your thesis. Let's hear the other side of the argument.
I'll do real quick because we got to get to list makers. But my biggest thing is a focus that I feel like this is a war based on materials versus a war based on location. I think this is a battle of supply, and what comes out of this is more inflation. And so to me, that's the biggest concern. And my thing is, if for some reason we do get continued action, military action, I think you could see oil just jump from one day to the next up there towards $120 a barrel. So that's why I think don't call the top today. Don't call the bottoms. I think right now in this market, you shouldn't be trying to maybe do both. Trying to find some trend in between to get some return, I don't think is a wrong thing. But if you're calling both sides, the bottoms or the tops,
it's a dangerous game
the wrong way.
And I think Mitch is just trying to teach me my own lessons here, obviously, because I've always said, don't be a bottom picker. Don't try to call the tops, trade it all in between, trade the trend. I'm fighting the trend on both of these trades. I'm actually trying to be a hero. This is the be a hero trade, which is probably the wrong thing to do. So in all likelihood, I probably will be wrong on this call. But I just didn't it felt like a reversal day, and I feel like I identify these pretty well.
Was there.
Yeah, so I didn't like the tape yesterday. That's what the major problem for me was, is I didn't like the fact that we had potential positive headlines for oil, and then they pulled the rug out from under from all these oil stocks. It's telling me that the trade's crowded, and maybe it's time to lighten up.
We'll see what happens. Like always, that's why there's two sides of the coins.
For sure.
And appreciate you like always, Dennis. Have a great day.
You too, Mitch. Okay, thanks, buddy. Bye.
All right, guys, going to get you over to list makers. I hope you enjoyed that little extra. I'm probably going to get yelled at for it. So do me the favor, smash that thumbs on up, get on over to the list makers, hit the subscribe, and let's get you on over. Let's keep it going. See you guys at Benzinga.